This is
Essential.
This is Essential Audio.
Welcome to the MoneyPot. We're back. Now, before you stop playing because you aren't hearing your hosts, Scarlett and Sanjeeb, wait just one moment. You aren't in the wrong place. I'm Roland Bodenham. I'm one of the producers of the MoneyPot here at Money 2020. I'm filling in for a moment today because our hosts are gallivanting in various locations around the globe. But don't worry, you'll be hearing lots from Scarlett and Sanjeeb in the weeks and months to come. So firstly, we have a couple of announcements to make. I'm very happy to say that the MoneyPot is going weekly and global. We look forward to bringing you consistent updates and tastes of the Money 2020 excitement all year round. In one article, this year's conference in Vegas was described as equal parts Athenian democracy and New York Stock Exchange floor. We agree. It covered so many relevant topics and fostered so much discussion that we didn't want to wait to share some of it with you. One of the most relevant topics was Facebook's Calibra project, and we want to share some of the most important ideas expressed on our stages. We'll come back to this later with Sanjeeb. To start, we're sharing part of Shamir Karkal's presentation, 3 predictions and bets, stablecoins and Facebook's Calibra. Shamir Karkal isn't new to the fintech community. He was a co-founder of Simple Bank and has since started a new project called Sila. Shamir helps express why Calibra is such an important project.
We're going to talk about the global financial system. This is roughly how it works. There's a bunch of central banks. They run payment networks like ACH or Fedwire or SEPA or UPI in each of their geographies. The payment networks are accessible only to banks, which are fractional reserve banks. And there's usually banks in the middle, most of them called Citi, which connect up these payment systems internationally. This is the main reason why nobody can ever afford to let Citi go bust, because if they go down, they take the global financial system with them. We're all customers of this system, and just to give you guys a sense of scale, I think the IMF's numbers are that it's about 4.7 trillion that's transacted globally every single business day. One important thing to note about this system is money itself. Most of the money in the world is actually created by banks, not by central banks. If you guys think that money that's held in a checking account or a savings account is actually money, then all of that is created by the banks. And there's actually a very good paper by the Bank of England called Money Creation in the Modern Economy. You guys can go and read it. They explain it perfectly. This system sucks. The thing is that, banks make most of their money by lending, and so they want to lend, and they lend in good times, and they lend more in good times, and they lend less in bad times. So there's a credit cycle, and the credit cycle just makes the business cycle worse. There's bank runs every 7 years between 1860 and 1907. There was a banking crisis in the US. Eventually, they created the Federal Reserve. When that didn't work, they had to try the FDIC and other things, right? So you can't, the combination of the credit cycle and the business cycle means that banks, which are heavily leveraged, tend to fail in a crisis, and when they fail, there's a bank run. It also leads to huge debt. Net debt in the US is about 300% of GDP. Globally, I think it's maybe slightly less. And this is the combination of household, commercial, and governmental debt, right? The system as a whole is very inaccessible. My last startup before this, I tried to start a bank, and it was pretty much impossible to actually get a banking license. I was told it would take $1 billion plus and 7 years to get one in the US. And the reason for that is because the system is very fragile. That means it has to be heavily regulated, and really only bankers can get access to the fractional reserve banking system. It is also one of the most hated industries in the US. It has, banking as a whole has a very low NPS. The industries that are more hated than banking are actually healthcare and cable TV. So if you're wondering who is hated more than Bank of America, it's Comcast and Aetna. Now just for a minute, dream with me. Let's see if we can imagine a better financial system for the world, right? What if we had no fractional reserve banks creating money at all, and everybody got an account with the central bank? Whichever one, I mean, it could be the Fed, it could be the ECB. I mean, if you're talking for the whole planet, maybe we could have one central bank for the entire planet. That way, you just get your money from the central bank, you'd store it at the central bank, and the real problem with this system, it seems almost grossly simple, right? Like, why can't we do that? The real problem with this system is banking and payment services, right? We get more than just money storage from our bank. We actually use it to pay our friends and lots of other things. Who would provide that? And it's hard to imagine the Federal Reserve meeting the full banking and payments needs of all 330 million Americans. But guess what? There's a lot of people who would happily act as intermediaries in this system. Those intermediaries don't actually look like a traditional fractional reserve bank. They look more like a fintech or a crypto startup. Folks who actually want to build cool apps on top of an API platform, offer it to everybody on the planet, but don't actually want to do any lending. They don't want to create money through fractional reserve banking, right? This system could have quite a few benefits. If you didn't have banks doing fractional reserve banking and lending, you would pretty much eliminate the credit cycle. And it's an interesting kind of economics theory question. If you didn't have a credit cycle, would you have a business cycle? It's not fully clear. So it's possible that we might not have recessions again. We would definitely not have runs on a bank, because if your money is at the Federal Reserve, there's never any reason to run on it. The central bank just, it can never run out of money. It just prints more. The economy as a whole would have less net debt if every banker out there isn't trying to push loans on everybody. And you could make this system a lot more accessible. You could think of like these intermediaries, since they don't have systemic risk, you could have thousands, maybe millions of them. I mean, how many apps are there in the App Store or in the Play Store, right? And you could actually imagine a proliferation of services, more customer choice. Maybe people actually start liking the financial system. This isn't a new idea, by the way. Back in 1936, a group of Chicago economists from the Chicago School of Business, led by a guy called Irving Fisher, proposed something called the Chicago Plan. If you remember the 1930s, the US financial system had just melted down. Most of the banks had gone bust. And it was clear that you needed something new. And they said, well, we have the Federal Reserve now. Why don't we just hold 100% reserves at the Federal Reserve and get rid of this whole fractional reserve thing? The problem with that in 1936, tracking 100 million accounts, forget the number of Americans we have now. Back then, it was pretty much impossible. This was an era in the 30s where banks were county-based. Everything was on paper. And even running like a statewide bank was a huge problem. And in fact, the word computer was a job description for a person who added up numbers. Things have actually changed. And now tracking 100 million or 1 billion or 7 billion accounts is actually pretty easy. Banking data is actually pretty small data. Running something like Instagram and managing photos is much harder than banking the entire globe.
Now that Shamir's outlined why we need a project like Calibra, we're going to go to a clip from the panel Stablecoins, the Transformation of Payments and the Evolution of the Global Monetary System. In this clip, you'll hear from Rachel Mayer, Director of Product at Circle, who issued the USD stablecoin, and John Muller, the Head of Legal from Calibra. They help outline why now is the time for stablecoins and what the goals of Calibra are.
Why do you think now stablecoins are getting traction? Like what are the benefits from a product perspective?
Yep. So talking about traction, USDC, just to throw out some numbers, we've had over $20 billion of on-chain transactions that you can look up on Etherscan and see and trace, and those are big numbers. We are the fastest growing stablecoin ever. We've issued over $1 billion in less than 1 year, reaching close to a market cap of around 500 million, which means that 600 million of those have been redeemed. So talking about a little bit about Center and how it works, so you have context. It's a multi-issuer model, so many different companies across the world and organizations can join to issue USDC and at the same time redeem USDC. And that is really important from a product perspective, knowing that you as an end user can both go into crypto and out of crypto without much friction or worry that stability won't be there. You could withdraw to your local bank account. So some of the use cases that made that traction successful in the first place, it started with the exchange use case, right? So crypto, since the beginning, has been about trading different types of crypto assets, and most of the exchanges around the world are crypto to crypto. And so having a stable coin that is an ERC20 token that has, that is transparent and you can issue and redeem it and transfer it instantly across the world, traders naturally gravitated towards that use case as a form of different types of rails. So they would move millions and millions of dollars across these exchanges, and that's where the on-chain activity started. And that use case still, is benefit today as quasi-fiat on-ramps for a lot of these exchanges and wallets. But looking forward, even we all here in this room don't want it to just be around trading. We want to see the full potential around payments, savings, and lending, and we're starting to see that traction today. Specifically, the ones that excite me are around these idea of DeFi or international savings accounts built on stablecoins and built on USDC, where anyone in the world can convert or convert to USDC and in form of these decentralized protocols, deposit and get interest rates of 5-8%, right? All in a decentralized fashion, like Compound, for instance. And so anyone in the world who maybe lives in a economy that is hyperinflation, that has a bank account in HOS, Turkish lira, could convert that and have, a mobile savings account in a wallet that they can take anywhere and earn interest. So that's a use case that is really gaining traction now, and it really excites me. And obviously we talk about payments all the time, and we want there to be a use case for payments, but we haven't really seen it yet. And so I think the problem that we've faced is, pay with crypto or pay with stablecoin. That's just not happening. And so we have to think as product leaders, a different distribution model or a different product offering that makes stablecoins and crypto an implementation detail and not front and center. So the end user just gets the benefit of, sending money from one country to the other through these open rails instantly and freely, just as you send a text. It's just a matter of finding a different distribution channel versus going directly pay with X.
I'm glad you mentioned DeFi. So, of course, this is a panel we're focused on payments, global payments, but decentralized finance is amazing. Who here is working in decentralized finance or excited about it? I should also say. It really is amazing what is coming in allowing for the lending, the borrowing, the custody, the savings, all sorts of new products that we haven't seen before, really. Mm-hmm. John, tell us what did the Libra Association set out to do? First of all, tell us who's behind the Libra Association and draw the distinction with between its members and with Calibra, and then tell us what it is that the Libra Association set out to solve and what you're building, and maybe talk a little bit about tokens, blockchains, and rails platforms.
So, of course, Calibra is a new subsidiary of Facebook that was created last year to spearhead this project and get it started, but always with a view of open sourcing the blockchain technology and creating a multi-party association to govern the development of the technology And as we've announced, there are now 21 members of the association, but the goal is to get to roughly 100 by the time of launching the service. The 100 number is really representation of a trade-off in the type of permissioned blockchain technology that we've started, which is that the more nodes on the network, the slightly slower the ultimate transaction speed is. And one of the important goals for this new blockchain is to offer greater transaction speed to accommodate a truly international payment network. So certainly to start with, not at Visa or MasterCard-like transaction per second levels, but certainly more than Bitcoin, or Ether are currently able to accommodate. So really the goal when we started the project was to address these challenges primarily in cross-border payments, but just in some countries still. Of course, there isn't a great domestic payments network, and one thing that blockchain builds in sort of automatically with its addressing scheme is interoperability. Just today, using the US as an example for person-to-person mobile apps, if I use PayPal and my friend uses Square, we really can't immediately transact with each other. But with a blockchain address, it's very simple for the equivalent of a PayPal and a Square user. It doesn't matter which wallet application they might be using, the interoperability is built in. So that's an important factor, what we're trying to achieve. And then the cross-border payments, certainly financial inclusion, the potential to serve those 1.7 billion unbanked people, 1 billion of whom have access to a mobile phone and some kind of basic data plan. So that potential is very important to us, but there are other cross-border payments use cases, of course, as well, and certainly in this audience, don't have to belabor the point, but there's a huge amount of cross-border trading on marketplaces that today encounter friction with currency conversion, slow payments. So we're really trying to build new payment rails that can address the gap, primarily cross-border, in some countries also domestic.
And now, knowing the reason for stablecoins and the ambitions for the Calibra partnership, we wanted to bring to you a portion of the discussion between our own Scarlett Sieber and David Marcus, the head of the Facebook Messenger unit and the head of Calibra. In this, he talks about why Facebook is so well positioned to pursue Calibra and why it should be trusted to take it on.
It's all about the people. At the end of the day, we feel, and I believe that on this one I can speak on behalf of our fellow members of the Libra Association, we believe that 30 years after the invention of the web, the fact that there's still no network that is global and that enables moving money around for a very low cost, that opens the door to the 1.7 billion people who are currently completely outside of our current financial system and the 1.5 billion additional people who are underserved by financial services, is not and should not be the reality that we live in today. And that's what keeps us really motivated to go through all of those hard things that we're all going through to make this dream, this vision a reality, because people really deserve better.
So I love this high-level concept and the mission behind it, but let's dive a little bit deeper now. So stablecoins are something else that's in the global spotlight, and the G7 released its report into stablecoins just 2 weeks ago. Accusations have been made that Libra and other stablecoins could pose a threat to national monetary policy. How do you feel about that? What's your response to that?
I disagree with the fundamental basis. I think that if you are to present a threat to monetary policy, you have two ways of presenting a threat. One is actually preventing sovereign governments from actually having and affecting good monetary policy, and today it's done through interest rates. And two is new money creation. In the case of Libra, there's zero money creation. Someone joked with me that there's actually more money creation in a Baskin-Robbins gift card than in Libra, and it's true. There's a full back-to-back, one-to-one backed reserve. For every unit of Libra issued, there's the equivalent value held in reserve, and as a result, there's no money creation whatsoever. I also think that in hindsight, the one thing that I would potentially do differently if we could do it all over again is really talk about what we're really building here, which is new payment rails, a new payment network that enables money to move on top of the internet the way it should, instead of emphasizing this unit of account, which basically is just an artifact that helps people move money around the world. But the feature of what we're building is actually a payments network. It's not really, a consumer-facing currency that people are going to use in their day-to-day lives in a lot of the markets that are involved in this conversation right now. You're going to get in and out of that currency when you need to move money around the world. And so, that's one of the reflections, I'd say, from the past few months. And this is, now 4 months old. And so it's still very early in the process. But, look, I feel that we have a path, we're determined, and I'm very confident we're going to make this happen.
So there are a lot of wallets out there, and I think one of the more popular questions among the audience was, what differentiates Calibra? Why is it different? And on top of that, why should people be using this?
So the first thing I want to say is that we designed Libra in such a way that any wallet could participate, of course, as long as you meet the standards that you need to meet in terms of AML and KYC, and we need to make sure that the network remains safe to operate. But it's going to be a very competitive network. And it's designed to be very competitive, and as a result, we come from a place where we need to earn people's trust over a period of time for people to want to choose Calibra over other wallets. And the way we're going to do that is, one, build very good data separation between Calibra and Facebook. So, this is why we created a separate subsidiary that is going to process all of these transactions. We've been accused by a lot of people to doing this for ulterior motives of just capturing more data to do better ad targeting, but we're actually not going to use any of that data for ad targeting because the data is going to be separate. But I think the value we bring is distribution. We have two of the most popular messaging apps in the world with WhatsApp and Messenger, and embedding the ability to move money around the world in an easy way in those messaging apps that you use for your day-to-day communications, I think is going to be a real value to people.
So on that data separation point, how you're going to ensure that actually happens?
So it's not trivial because, as you can imagine, the infrastructure that we have at Facebook has been set to actually look at the data and leverage the relevant data for ad targeting. So separating it completely is a lot of work, but we're going to do that, and we're going to have it audited in such a way that people know that the commitments we're making are actually being followed through. The other thing is, you might have heard of this FTC settlement that we've had, which is now putting us under increased scrutiny in terms of the commitments that we make for privacy to consumers, and the fact that we all have to certify that we're respecting those commitments personally. And so that puts a lot of pressure on the whole leadership of the company all the way to Mark to ensure that the commitments that we make when we talk about data separation, data use, etc., are followed through.
So, we hope you enjoyed this taste of what the conference offered with Calibra. As we go forward, we'll be sending you episodes that share just a taste of our archives, as well as our interview episodes. The producers, Rachel Morrissey and myself, and our hosts, Sanjeeb and Scarlett, are really looking forward to making sure we're covering the breadth and depth of all the changes in the financial industry as we discuss the forces and ideas changing our vision of the future. We'll be here again every week, so don't forget to subscribe to the MoneyPot wherever you listen to your podcasts. Thanks for listening.
This is
Essential.
This is Essential Audio.